All right, let's take a look at what's happening with my little BYND meme stock experiment. The share price dropped today, which pushed my cash secured put in the money. Instead of panicking or doom scrolling the headlines about how BYND is crashing, I'm doing what I always do, rolling for income. I rolled the put out 2 weeks, kept the same strike, and collected a net credit. That lowers my adjusted cost per share and keeps the wheel turning. The covered call is expiring tomorrow, and I'll take care of that one next week. This is a Wall Street Bets favorite, but I'm not trading it like a degenerate YOLO. I'm trading it in the same careful, systematic way that I trade QQQ, NVDA, and SPY, just with a much smaller position and much bigger percentage returns. Let's look at how today's roll affects my average price per share in the spreadsheet. Beyond Meat has dropped in price to just over 93 cents a share. You may recall that about 10 days ago, I bought 125 shares paying $1.33 a share for them. So the price has dropped 40 cents a share, which is a huge decline in the share price. At that time, I sold a cash secured put with a strike price of $1 and a covered call with a strike price of $1.50. I did an analysis at that time to see what would happen if the price dropped and I were assigned to buy 100 shares, hypothetically if the price dropped to 90 cents a share. So I already know that if I accept assignment to buy these shares tomorrow, my total out of pocket will be $240 and my average investment per share will be $1.07. But I've decided rather than accept assignment, I'm just going to roll it out 2 weeks and try to generate a little bit more income with the cash secured put. I'm going to click on the cash secured put. The extrinsic value has almost completely eroded away. It's going to cost me about $7 or $8 to close it. And let's see what I can receive for a new cash secured put expiring a little bit later. I'm opening up the option chain, and I'm going to look at November 28th and December 5th. If I roll it out to November 28th, I can bring in about $11, but if I have to pay $7 or $8 plus trading fees, that really would not give me any meaningful income. So I'm looking at December 5th, where I can bring in about $14 or $15 for it, or even December 12th, where I can bring in $17 or $18. On trades this small, even $1 or $1.32 of trading fees actually do make a difference in my annualized returns. So 1 week roll doesn't make any sense. 3 weeks is longer than I want to go, so I'm going to roll it out to December 5th with a strike price of $1 and expect a net credit of about $6. Right, so I've already selected the trade that I'm adjusting. I'm going to click here on Roll Selected. I'm going to change the date here from November 28th to December 5th. I'm going to ask for $7, knowing that that will give me $5.68 in income. Click Send and see if it will fill. All right, I don't have any bites on it, so I'm going to lower my ask by $1. Now this one should fill because it is right at the lowest ask, so I'm not sure why it hasn't. Oh, there it went. All right, so I'm going to check my filled orders. I see that it filled at 6 cents a share. So with trading fees, I just had $4.68 come into the account. Let's go put it on the spreadsheet and see what kind of returns we're getting. A $4.68 return on $100 of collateral with a 15-day holding period comes out to an annualized rate of return of 113.88%. So this is now my new open trade, and the one that was expiring tomorrow is now closed. I'm going to change the date on this because closing this one 1 day early actually will increase the annualized rate of return because it becomes a 10-day trade instead of 11. So I increased my annualized rate of return to 267.91 on that cash secured put. Let's change the color so I know it's closed. I'm going to leave the covered call to expire tomorrow, and I'll set up a new covered call next week. Let's see what this trade has done to my total expense and income and adjusted cost per share. Right, on November 10th, I bought 125 shares, sold a cash secured put, sold a covered call, and today I rolled a cash secured put. So my total out of pocket right now is $135.89. I'm going to divide that by 125 shares. So I brought my average investment per share down from $1.12 to $1.08. We'll see what happens with this covered call tomorrow. I expect it to expire worthless, and I'll set up a new covered call next week.